India is a haven of stability, the fastest growing major economy in the world and an outpost of opportunity. That's how the economic survey describes the state of the Indian economy, pegging next year's growth at more realistic levels between 7 to 7.75%, a wide range, perhaps an indication of the kind of uncertainties we face going forward. But the Indian economy is clearly not realizing its full potential, is what the survey says, despite still oozing potential. Hello and welcome to Budget Buzz. I'm Shweta Rajpal Kohli, and today we discuss some key elements and highlights of the economic survey, which in many ways is just the economic report card of the economy, which comes out every year ahead of the budget and gives some sort of an indication as to what we can expect Finance Minister Arun Jaitley to do on Monday. Joining me on the show, well-known economists Sajid Chinoy and Ajit Ranade, and to give us a political perspective, we'll be joined in by Sanjay Jha of the Congress and PN Vijay of the BJP. Let me go first across to Sajid Chinoy to get the economist's perspective on the survey that has come out today. Sajid, your first thoughts on today's survey. While some are calling next year's growth rate realistic, others are a bit miffed at the wide range that Arvind Subramaniam has given us, 7 to 7.75%. What's going on?
Yeah. So I think that the survey typically serves two purposes. One is an assessment of the economy. The second is some thematic area. I think on both fronts it's done exceptionally well. What I was particularly pleased by was that you finally had a dose of realism. It was realistic, it was sober, it was balanced, and therefore it was credible. Let's not undermine the fact that India is very connected globally. Global growth has got significant concerns, and what the economic survey said is, in view of those global risks, number one, in view of the fact that you've got a significant balance sheet problem both for banks and for corporates, and in view of the fact that the oil windfall from last year is going to halve next year, it's unlikely to expect India to show sharp growth acceleration next year, and therefore their best forecast is that growth next year is in the same range as this year. In fact, if anything, the risks are to the downside. I think that's welcome honesty, that's welcome realism. And the fact about the large range, I think, is understandable for two reasons at least. There's a lot of global uncertainty here. We're not sure where China's growth is going to go, where global growth will go, what will happen to oil prices. And there's also uncertainty, as we've seen, about our own methodology. Very often in certain quarters growth is higher or lower than we think because the deflator is hard to explain. So I think for both those reasons, the survey, I think, has been very realistic, very balanced, and it's also made some excellent observations which we should talk about later on the need for institutions in India to propel medium-term growth.
All right, important points that you've made, Sajid Chinoy. Now let's look at the way forward. Ajit Ranade, if I could bring you in here. Essentially, it's now important to understand what next. Sajid telling us there that we've got a more realistic economic survey this time around, something that gives you a more balanced perspective. And look at the downsides that we are up against, whether it's the global uncertainty or what seems to be happening here in India, the corporate indebtedness. It would be unfair to paint a very, very rosy picture right now. But share with us going forward, what are the options that the government has, given the downsides, to propel growth further?
Yeah, firstly, I want to compliment that the survey is, a fantastic document. I think this tradition started last year in the sense of having volume 1 and volume 2. Volume 1 has a lot of very sort of well-researched chapters on various topics. Secondly, as Sajid said, the range given for next year is rather wide, 7 to 7.75, which captures the uncertainty mainly about the global economic environment, which will help growth through exports, and also domestic outlook for agriculture, because a lot depends on what happens to the monsoon. There's also a sobering undertone to this, that the trigger, the uptick for services and industrial growth, that is non-agricultural growth in India this coming year, cannot be very high. And that's partly explained by what Sajid was saying, that corporate balance sheets are stressed, the capacity utilizations are low, they are also fighting with competition from imports and so on. So the trigger, obviously, Shweta, is going to come from public investments. Private investments will follow suit. We'll have to see in the rest of the year. But public investments, especially I would say on rural infrastructure, is one of the big key factors which will propel growth. And of course, taking care of the bank balance sheets. But in terms of growth, I think it's mainly huge dependence on the infrastructure, especially rural.
Okay, so you expect rural infrastructure to be a large centerpiece of the government strategy going forward to boost growth. And that brings me to the big debate that we seem to be having right now ahead of the budget. The fiscal deficit target, fiscal slippage. Should this government spend its way out of the current so-called, we cannot call it a crisis, but at least the kind of slow recovery that we are seeing? Is it okay to slip up on the fiscal deficit target a little as long as we achieve that growth? But ironically, that brings us to the question, as I was talking to Ajit Ranade earlier, why should the world's largest, fastest growing economy have a fiscal deficit worry right now and worry about these things? Ajit Ranade, my question to you really is that which side of the debate are you on? On one side, we are saying that yes, we need to provide a fiscal stimulus. But why should the world's fastest growing economy need to even provide that fiscal stimulus? Isn't that an irony and a contradiction in itself?
Yeah, to begin with, it sounds a little ironic to say that we are the world's fastest growing economy, but we need a fiscal stimulus. But leave that aside, Shweta. I believe that we are in a situation where we can actually afford a stimulus in the form of rural infrastructure and balance the books in terms of keeping the fiscal promise of 3.5%. Secondly, this is a year where we have low oil prices, therefore lower burden on oil subsidies. So if we can't manage fiscal pressure, situation in a low oil price regime, imagine how much worse it will be if oil prices shoot up. And thirdly, I believe this signal of 3.5% is going to be very strong and very welcome by the global investor community. And so what if after 12 months, there's a slight slippage of 3.6 or 3.7%. But at this stage on Monday, it would be great if the finance minister can give a signal. Fourthly, I believe as we can discuss that about what is the strategy to make.
Right, let me take that view, Ajit Ranade. Sorry to interrupt you there, to Sajid Chinoy. Sajid, it's an important point that Ajit Ranade is making there, and I'd like both of you as top economists of the country to actually discuss and debate this if possible. What Ajit Ranade is saying is it's important to send out that message, that signal on Monday that yes, I'm sticking to my fiscal deficit target, the path, the roadmap that has been laid out, and we can see what happens at a little later stage, but for now it's important to send out that message. There are others who would argue that a number which doesn't even look credible would in many ways put a question mark on the government's math that Arun Jaitley will present on Monday, because at the end of the day, if he is providing that much needed stimulus, then he is caught in that vicious cycle, because how do you provide a stimulus and not impact your fiscal deficit?
Yeah. No, I completely agree with Ajit. I think both parts of the equation are important. You want credible fiscal consolidation. So you want fiscal consolidation, but you also want credibility. I understand both arguments. There is a concern here that the survey has on weaker growth, and therefore a lot of people talk about providing some growth insurance in the form of lower consolidation. A lot of people talk about feasibility. How do you reduce the deficit in a year where you've got agrarian distress and you have to provide for more rural infrastructure and you've got a pay commission? But I go back to the events of the last 3 months. If there was ever a doubt about the importance of fiscal credibility, just look at bond markets in the last 2 months. You've had a lot of nervousness in bond markets just in the last 4 or 5 days. And I think that reflects the fact that we're in a very precarious situation where state finances will deteriorate next year. There isn't too much demand for government bonds, and therefore if the central government were to renege from its path for a second successive year, inadvertently what that will do is push up government bond yields and therefore push up borrowing costs for the entire economy and the private sector in particular. So I understand it's a spirited debate. I would come out on the side of Ajit. I think it's not worth risking fiscal credibility for 0.1 or 0.2% of GDP. What I think is it's important to hit the number you set out. So I don't think it'll be a good idea to set a number of 3.5 and then breach it later in the year.
Right.
And I think the way to square the circle is quite simple. I'll just make a final point. This is the time India must think more creatively and more comprehensively about selling assets, whether it's Spectrum, whether it's Suti or other companies, because that's the way you can bring a fiscal deficit down and give the rural economy that infrastructure that Ajit's been talking about.
Okay, Ajit Ranade, my point to you next would be on the focus on rural versus urban. It doesn't necessarily have to be rural versus urban, but a lot of talk right now is that this will be in many ways a rural budget, a budget for rural India, a budget that will help alleviate the agrarian crisis. It is something that will not only make good economics, but even good politics at a time when the general perception this government is facing is that it has ignored that part of the society completely. Farmers and their situation is absolutely grave right now. Would you agree with that, Ajit Ranade?
But very quickly, Shweta, if you'll allow me half a minute for the previous question, remember the government is the biggest borrower in the system. Therefore, lower deficit or a control on deficit and lower interest rates benefits the government the most. But on your question of urban versus rural, I don't quite see it in such a strong language that you just now said that the government has completely ignored the rural areas. That's of course is a bit too harsh. It's true that there's 2 consecutive years of drought, and the stories of rural distress are very, very acute and have to be acknowledged and taken cognizance of. People say that there's a difference between rural and agriculture. The distress is much more in agriculture and not in rural non-agriculture. And we have seen for a variety of reasons the stagnation in rural wages, the drop in sort of the relative loss of price advantage to rural commodities or rural crops for various reasons. The collapse in dairy prices, milk prices, for various reasons, the terms of trade are adverse to rural areas and especially agriculture. So this is we definitely need much more focus and impetus to rural areas, and I believe rural infrastructure in the form of rural roads, rural irrigation is the way to go.
All right, I'm going to slip into a quick break at this point. Ajit Ranade, Sajid Chinoy, do stay with us, but we also joined in by PN Vijay of the BJP, also well-known investment banker, and of course Sanjay Jha of the Congress to shift the focus slightly from pure economics to the political economy. That's coming up in just a bit.